Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
So today we have Justin Bene with us. And Justin, it's great to have you. I'd just love to hear kind of the history of how you ended up in the wild world of insurance.
Absolutely. It's an interesting business, to say the least.
To say the least, particularly right now.
Yes. Very, very challenging times in the insurance business right now. I've been in it for well over 15 years, and this is definitely the hardest market anyone's seen, including my partners who've been around for quite a bit longer than I have in the industry. Everyone agrees this is probably the roughest time the insurance industry's had, particularly in California.
Wow. Okay. So you started out at Northridge. Did you immediately go into insurance when you came out of Northridge?
Yeah, it's funny. So the short story is I was racing motorcycles, kind of as a hobby. I graduated college. I was at the racetrack doing a track day, and I happened to meet a guy who was in the insurance business, and we just were talking, and I had said, I'm not really sure what I want to do. Do I want to get into energy? Do I want to get into finance or insurance? What can make money to support my hobbies, right? And insurance kind of seemed like the lesser of all evils. So I ended up interviewing with him and joined that firm, and quickly became the #1 producer there. I ended up partnering with that guy who originally brought me in and one other person in that office. And within 2 years, we started our own agency from scratch, built that company up. Sort of outgrew those partners within a few years and realized that I really wanted to focus on commercial insurance, not just home and auto, which is becoming quite commoditized. And so I ended up meeting the folks who own the current firm I'm at, and they needed someone to help them perpetuate the business. And so after mulling it over for 6 or 8 months, I decided to get out of my partnership, roll my book, and help them perpetuate that business and sell to private equity. And so that was, almost 10 years ago, and we're about 4 years into that private equity deal, and it's been fantastic. So I never looked back.
So that's interesting. So can you disclose who the private equity folks are that backed you?
Yeah, it's called Foundation Risk Partners. We're a top 20, arguably top 18 firm in the U.S. now. They've only been around 7 years, so we got in quite early. 205 locations, 2,500 plus employees. We're in 23 states right now. We don't advertise, so you've probably never heard of us, but we're quickly becoming one of the #1 brokerages in the U.S. And we only acquire best-in-class agencies. So the unique thing about us is we may look at 20 or 30 firms, and we only buy one. So we're very picky about who we bring into the firm. Either they have a niche, or they've got a really strong book with really strong agents, well educated. So we only bring in the best of the best. That's kind of what we hang our hat on.
So what size firm do you typically look at?
Typically larger firms. So I would say at least 5 million in revenue. Not premium, but actual gross revenue. It's kind of a starting point for us. But more of the 10 to 50 million in revenue is kind of what we like to look at, particularly multiple locations, and if you have a niche.
Yeah. So are you involved in the selection process? It sounds like you are.
Not so much, but I have referred in quite a few agencies to bring into the firm. Obviously, I know a lot of people being in the industry, and so if I have a friend or somebody who knows somebody who's got a great business and they need the tools and resources, in the insurance industry, unfortunately, being a small mom and pop, you just don't have the tools and resources that you need to be competitive in this market. You have to feed a lot of companies' business in order to keep appointments, in order to get the right pricing or get the right terms. So you kind of have to be a big company now in order to compete at the level that you need to compete, particularly in middle market. So, a lot of smaller mom and pop shops are realizing they have to join a larger company in order to be, to be competitive. And a lot of kids don't want to join the business these days. A lot of these, people will have kids, and the kids don't want to join the insurance industry. It's not sexy. And so, a lot of them don't have a way to perpetuate, and so private equity is a great solution for them.
So that's interesting. The insurance world has kind of suffered from bad image. So is anybody kind of dolling that up and making it much more fun and interesting for the younger folks?
We're trying to. We are putting on internships. So we're bringing in kind of the best and brightest out of college, and we'll bring maybe 20 people in over the summer, state by state to our different corporate headquarters, and we're training the best of the best, and maybe we'll bring in 5 or 10 of them. So we're being selective about who we bring in, but again, it kind of holds true. We want the best and brightest minds. We want the hardest working folks. We want people who can think outside the box. But it's tough to bring people into this industry. It's a small industry, as big as it is, and you have to have very specific education. You have to understand contract law. You have to have certain designations. So it's a very small pool we're pulling from to bring in the right people. And that's where also a lot of the smaller agencies are struggling. People are noticing service is starting to get a little tougher for these smaller agencies, simply because they can't find the right talent, the right account management, the right producers to bring in to stay competitive. So
Yeah, no, that's got to be tough. Are you soliciting to the B schools, or are you going to the colleges?
a lot of it's really by a referral. People who are in the insurance industry tend to know people in the insurance industry, right? So it's a small pool. We just try to attract the best and brightest minds we can.
Oh, that's cool. So is
Yeah.
FRP into the reinsurance world, or do you stay out of that one?
Not so much in reinsurance, but we do delve into alternative risk management solutions. So captives are a big thing with us as well for larger accounts. Of course, there's smaller group captives, but for people paying over $1 million a year in their insurances, they might be a candidate for a captive, and so we bring those solutions to the table as well.
So for those listening, what is a captive?
Captive is a partially self-insured insurance program. So you basically create your own insurance company effectively. You can do that through a group captive, meaning an existing captive that brings in a smaller pool of similar businesses. So for example, it could be contractors. Maybe there's 50 contractors in this group captive, and you share an insurance program, and you all pay into it. And as long as it performs well, you get paid dividends back. So it can be a great asset class. For larger risks, if you do a single parent captive, you're basically self-funding it. You have larger deductibles. You partner with a reinsurance carrier, and you have a law firm that helps you manage it. But again, it becomes an asset. So once you funded it properly, which takes usually 3 to 5 years, you can start paying yourselves dividends, and ends up costing a lot less money. And then you've got a big chunk of money sitting there. If you ever sell the business or retire, you have money sitting there that becomes an asset. So it's a really interesting tool for larger accounts.
So who manages the pool of funds in that kind of captive world? Do they hire somebody to manage the funds, or do they self-manage? How's that work?
Yeah, it has to be done through a very diligent legal process, because you may or may not have heard of captives back in the 70s and 80s that got in trouble, because a captive, if not managed properly, can no longer be insurance. It can be an investment, and it can't technically be an investment, right? It needs to be insurance primarily. So you can't just put $10 million into an insurance captive, which is non-taxable, right? And then say it's just for general liability, right? You have to have appropriate funding for what the actual risk is. So people were kind of playing with the system and overfunding them and having tax loopholes. So it has to be administered properly by a law firm and by accounting firm. But if done properly, they're great assets.
That's fantastic. Has FRP gotten into any of the infrastructure funding world? Have you heard of that?
I'm not sure exactly what you're referring to, but as far as captives go, we've done the largest captive, as far as I know, in U.S. history for I won't say the name. I don't want to violate any NDAs, but for one of the very large property management companies out there. So
Oh, interesting. Wow.
about 3,000 plus rooftops, nationally.
Oh my gosh. Well, yeah. Now, this is a situation where people will fund infrastructure projects and they use reinsurance to actually guarantee the return. So I don't know if it sounds like you haven't worked in that particular area.
Yeah, not necessarily, just more on the insurance side, but it's it's an interesting business. Everyone's always trying to move and shake and find a new, a new solution. So
Is the crypto world starting to creep into insurance at all?
yeah, there are some companies coming out with products for crypto. I can't say they're all that successful just yet. It's still kind of the Wild West, but there have been some carriers approaching us about providing, crime coverage and cyber coverage for crypto, exchanges and things of that nature.
So tell us again about the way to insure your cyber world.
Yeah, I think you and I were kind of talking about it before we started, but what I would say the biggest issue people have, and there's a lot of misconceptions, right? People are having claims denied in the cyber realm right now. And primarily the reason for that is because they're not filling out the applications correctly. So what I say for cyber, EPLI, professional liability, D&O, any of these what we call management liability type insurances, the applications actually become part of the policy. And so it's very important that there's no misrepresentation. Whatever you put on that application has to be true. Otherwise, you're giving the insurance company a reason to deny a claim. As I said, insurance is contract law. And so if it's in the application and it's correct, or if it's in the policy, they have to cover it. If it's excluded, they don't have to cover it. So we don't want to give a reason for an insurance company to deny a claim. I tell everybody to send the application to their IT company, let the IT provider fill out that application for you. You've now transferred that risk effectively to the IT company. If they performed an error or omission on your application and got a claim denied, now it's on your IT provider. So I would have them fill out the applications for you, and that way all the controls are accurate and we can get you the best terms, and we eliminate the ability for a claim to get denied.
So just for fun, before we end here, what's your favorite food?
Obviously I love sushi, but kind of my drug of choice would be, what's funny is the Trader Joe's olives. I like these spicy, jalapeno and garlic olives. I don't know why, I just love them. But that's kind of my favorite go-to snack.
That's interesting. I keep finding things at Trader Joe's that I've never heard of before, so I'm gonna go try those. And because I do love olives and spicy and garlicky, that sounds even better to me. So I'm definitely gonna try those. And who are we gonna sit down and eat these olives with?
I just snack on them at my desk. I mean, and they're tough to get too because they often sell out, and then you can't get them for like 2 months. So anytime my wife sees them, I say, "Hey, please grab me like 5 or 6 jars of those."
But a person alive or dead that we might eat these olives with, who might?
Oh yeah. Well, one of my heroes growing up was Ayrton Senna, which was a famous F1 driver who tragically passed too young. But I'm a big motorsports fan, and so I would love to just talk with him for a few minutes and understand, kind of where his head was at and his process. So
All right, we're going to talk to you in 6 months to a year when you start you're going back into the motorsports world.
yes, absolutely.
That'll be fun. Well, this is great. Where can people get a hold of you, Justin?
They can get a hold of me either at my direct cell phone, so 818-605-2955. It's also my work line, or you can reach me via email at justind@kmins.com.
Fantastic. All right. Well, I look forward to talking to you again. And for those people that want to get into the whole insurance world, particularly the captive world, it sounds like Justin is the person to talk to.
Awesome. Thank you, Bruce. I really appreciate you having me on.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.